As the popular saying goes, as a trader, if you cannot spot the liquidity in the market, then you are the liquidity. And that's why you need to watch this video to the very end, because this trader just reviewed exactly how to spot the right liquidity sweep so that what you don't become the liquidity for other traders.
Now this, my friends, is not a good liquidity sweep. If you think it is, you're going to enter into a short position above this high, and you're going to have your take profit set at the sell side below, only for price to continue higher and stop you out. So let me show you how to find the right liquidity sweep so you can avoid losing thousands. Here on the chart, we have 3 different pools of liquidity. The liquidity resting within a range is known as our internal liquidity. The liquidity resting outside of the range is known as our external liquidity. We want to make sure we avoid using internal liquidity sweeps. Instead, we want to focus on using external range liquidity sweeps to get high probability setups. So let's play this out. When price swept the first pool of internal liquidity, we can see that we continued higher. When price swept the second pool of internal liquidity, we can see the same thing happen. Traders that shorted after both of these liquidity sweeps would have been stopped out. Now let's see what happens when we use the external range liquidity sweep. Price flushed lower after engaging with the ERL. My Forever Model Rulebook, which I use every single morning, explains exactly which liquidity sweep to use. And if you want to use this guide, all you need to do is comment rule and I'll send it to you for completely free.
Now he just exposed every single thing you need to know about liquidity in a very short, simple video. And I would say this is a great model as well. As someone who trade support and resistance, if you look at what he just shared right now, it's 100% valid. Those 2 first levels that he marked out and identified as normal liquidity levels, those levels will eventually be swept out because those are just normal basic, I would say, internal resistance area on a lower time frame. The top one you see over there is the actual resistance level when you go over to the higher time frame. So I would say the top one will hold more than the middle ones. And personally, I like trading extreme levels because they give me a fairer buy or sell entry. So if you're looking for a reliable prop firm to trade with, I trade with Blueberry Fund. The link will be in my bio, and if you're on YouTube, do have to check the video description. And also, if you're looking for a reliable prop firm broker to trade with, I trade with Light Finance, and you can also trade with them as well.